I do think having clarity on a deal is good news. So I'm not surprised the market being hopeful that we're getting closer to a deal is going up. But just because we get that handshake and signature from President Xi and Trump, I think there's still three big things that are going to be out there that could weigh on sentiment ahead. One would be technology. Even if we have a trade deal, the U.S.-China war on technology, so to speak, I think continues, especially ahead of 5G getting rolled out over the coming year or so. And that's going to be a lid on sentiment. Secondly, President Trump today said that tariffs are leverage. Well, we get the report on auto imports probably this weekend, which would give the president the authority to possibly have tariffs on foreign auto parts and automakers. That's uncertainty for Germany, for Japan, for Korea, for other countries. And that uncertainty, I think, could put a lid on equity investor sentiment, just like enforcement of a Chinese trade deal. If we're reviewing it and threatening tariffs every few quarters or months, that limits certainty. And then finally, if China becomes a current account deficit country, which could happen on the back of this trade deal, there's a whole set of implications there, including the potential for a weaker Chinese renminbi that I don't think investors have really wrapped their heads around yet, but it could be a big negative shock if it were to occur.
And that could contribute to a stronger U.S. dollar, which has already been a headwind for a lot of multinationals. Ron, on top of all this, we have data that continues to, I don't want to say, it can be question marks for an investor who is unsure of the rally that we've seen, whether it be IP, the retail sales number, the data out of Europe. I mean, all of it could be question marks.
And the global data seem to be real insofar as they are weakening. It's questionable whether or not the U.S. data are accurate given the shutdown and some of the other disruptions that we saw earlier in the year. I mean, one thing that's interesting about this rally, we're in a place now where we don't have to fight the Fed. We don't have to fight the tape. We've seen a lot of technical improvement in the stock market. Scott McClellan was pointing out that if we hold these advanced decline numbers today, the cumulative advanced decline line will have made a new high before the major averages, which is a technical positive. Having said that, we've had a good year in 6 weeks. So if you're overextended in some individual stocks or overextended in some sectors, you might want to rebalance your portfolio and take stock of what's gone on just in a 6-week period.